Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. Hope everyone's doing well. Hope your morning's off to a good start. All right, great to see everyone. Lots of familiar names. Awesome, awesome. Good morning, good morning. Hello from Texas. Hey there. Hey there, Mark. Hey, Chaz. Hey, Earl. Good morning, good morning. All right, let's get to it. Let's get to it. We have, today is Thursday. So let's jump on over to the economic calendar and we will walk through, not my notes, calendar. There we go. Let's walk through the economic calendar here. And if you haven't already checked it out, so let me show you. So it's forexfactory.com. Really easy place to go for our hot zones, apart from our earnings season, by the way. Apart from earnings, scroll on down and you'll see we have the GDP today. Now, as important as GDP is, right? No doubt. It's one of the three macroeconomic pillars, if you will. What is the Federal Reserve looking at to measure jobs, unemployment, JOLTS, NFP, right? How is the Federal Reserve measuring inflation? Primarily PCE, which, by the way, is tomorrow, and CPI. Then we also have a look at, of course, growth. And I'd have to say of all three, that's probably the least important, quite frankly. However, I get this question, and I love the question because it shows that you all are, that we understand, right? Here in the community, we understand that data isn't just looking at a forecast of 2.0 or the previous at 2.6 and the actual. The reaction is what matters. What happened at 8:30? We'll take a look at the chart. But the question I get a lot of is, Rag, is bad news still good news? Now, is a miss in data, the kind of data that we're talking about, actually bullish for the stock market? And the answer is, so you have unemployment claims. So unemployment claims were a little bit better, quote unquote, good news, right? That's a miss, right? That's a miss. That's quote unquote bad news. All right. All of this really lands here. Boom. All right, let's take a look at the S&P on the 5-minute chart. Let's move all this over. And I'm going to pull up ES, which I think I'm already on. All right. And what we want to remember is at 8:30. And then if you're looking at, well, you know what? Let me do this through the HPMRs, and here we go. I'll do it on TOS as well. We can look at both. Here's your 8:30 candle, all over the place, right? 8:30 included the claims number and GDP. High, I mean, that's a crazy candle. There's a lot of opinion there. The number on face value is terrible. Then you dig a little deeper and think, well, bad news is good news. And ultimately, and it took about, let's see, 5, 10, 15 minutes, and look at what we're doing in the aftermath. Now, there are, of course, a number of other things we could consider. And the most important is, well, you know, it's become such an odd little buzzword. But to talk about macro, right? Macroeconomic study, the rate of change of those three pillars we spoke about. And then here's why we care. You might say, Rag, why do we even care? Here's why we care. We care because what those data points reveal is what ultimately we think, and we'll discount into this chart in front of you, the Fed fund futures. So we can see here, May, nothing really changing here. This is a 1/4 point hike, which continues to be quote unquote fully discounted above 80% expectation. Here's where it gets interesting. All right, gang, here's where it gets interesting. This is June. Are we going to hike or are we going to hold? Hold is still 60% likely, but that hike is creeping in there about 28%. So we cannot neglect that. We move out to here we have July. It's still very much expectation of the hold, which is on May 3, we're going to get to that 5 to 5.25%. In June, we could hike, we could hold, but it's still mostly hold. In July, we could hike, we could hold, it's still mostly a hold at 52%. But take a look at these two columns here. There is a very small expectation for a cut. That's a little bonkers. All right, that's a little bonkers. Let's move out to September and November. And this is where we are beginning to expect. Now, look, this is not about prediction. This is about expectation. And this is where we're starting to expect that the Federal Reserve is going to, as it's famously said, pivot, right? That's the expectation. All right, hang on one second, gang. Got a bunch of things running here in the background that I really should have shut down. Hang on one sec. All right, something's bogging my computer down. Sorry, gang. Something is definitely bogging my computer down. I apologize if it's glitchy on your end. All right, just bear with me one moment. I think we're good. All right, we're good. We're good. Thank you. Thank you. All right. So this is. Oh, by the way, I got a question from the trading room. Hey, Bob, if you Google, I could give you the URL, but it's a big old mess. Google. Here, let me show you right here. Google that CME Fed Watch tool. Google that, and the hit that you'll get atop of Google is going to be this chart. All right, very easy, right? Heaven forbid the folks on CNBC just tell us, "Hey, we're looking at Fed Fund futures," because, well, it demystifies all their magical knowledge, doesn't it? This is where they're getting the information from, gang. So why not go to the source, make up your own mind list rather than listen to some talking head on television? Yeah, y'all know how I feel about that. All right, moving on to September 20. This is where this Fed pivot's much, much more discounted. So again, it's not a matter of what the Fed is going to do. It's a matter of what we expect them to do. Okay. All right. And that's really where this lands. All right. We can talk about all the gobbledygook, but in the meanwhile, that's the movement we're seeing on the ES. That's where this lands. Okay. Now, in the meanwhile, we have some other data that obviously we're dealing with. Meta is in fuego right now. When you take a look at what's been happening with earnings, Microsoft, big time move to the upside. Meta, big time move to the upside. If you checked out yesterday's charts and coffee, which, by the way, gang, that was a pre-recorded charts and coffee. I had a immovable appointment that I had to keep, and I thought, you know what? Let's just at least keep the conversation going. So if you've ever wondered, yeah, Rog, how do you look at earnings, gang? There was never a moment after Jan 11 that Meta on a daily time frame with that longer time horizon should have even considered to be sold. If you're using the multi-trend, if you're using that process where we talk about 4 exponential moving averages suggesting the path of least resistance, Meta followed that perfectly. So I'm not saying that it necessarily says, oh, earnings are going to move higher. But if you're thinking about the ramp up, the 642 that I taught you all in yesterday's charts and coffee, it's a post over at countdowntrader.com. This is the way that I look at it. And if I've got an uptrend in Meta, gang, I could choose to be flat going into earnings, which is what I suggest. It's what I do myself. I'm usually flat as far as a trader with a shorter term time horizon goes. But as far as longer term time horizon, this has been very clearly bullish pretty much all year long. All right. So am I surprised to see, we're going to wake up to Meta on fire up at 241? We are. Again, this is really a continuation of a psychology that's been in play for most of the year, right? Okay. So I hope that kind of gives you an idea of where we sit. Obviously, Meta, heavily weighted in the S&P, heavily weighted in the NASDAQ, heavily weighted in the XLC ETF, which means Google should get a boost too, gang, because Meta's number 1 weighted in XLC, but Google is number 2. And so when we take a look at Meta Platforms and Alphabet, does anyone call those 2 stocks Meta Platforms and Alphabet? I know I don't. But anyway, their rising tide And this should be a very interesting morning. All right, so let's get to the questions. As always, best part of our show. Thank you as always for being a part of it. All right, so let's see what we've got here. Let's see, kicking it off with, bear with me, gang. Working two rooms here this morning. And also, let me move these charts up so we can see them really clearly. Awesome. All right, first up, Peter asks, ATVI. How do I determine that there is enough liquidity in an option? Oh, okay. So let's jump on over to Activision. All right. The question is about liquidity. When I talk about liquidity, what I'm talking about is, let's pull up ATVI. Now, I'm not playing ATVI. This is a question about liquidity. I can see maybe why you're wondering, hey, wait a minute. Would it be worth waiting for an inside candle or a minor low? Yeah, I definitely would wait, but give it 1 to 2 sessions, Peter. But let's say you're looking at, and I'm going to pull this up right now because I'm curious too. All right, so ATVI moving lower. And let's say we start with the May 19s, okay? And I would be shopping somewhere in the vicinity of 78, 77, 76. All right, 75s are liquid. Look at May 19, and anyone who's interested in Activision, look at the May 19 expiration. You'll see 16,924 open interest. That's plenty. For me, the minimum is 500, and I even then don't love it. I prefer 1,000 or more. The 77 strike is only 29. However, the 77 and a half is 1,400, right? So I'm going to look for at least that 1,000. And that's what I teach in the Sector Secrets Mastery for a couple reasons. Why don't I like meme stocks? Again, a lot of times they're very illiquid. They're very volatile. But along the same lines of things that I want to avoid are illiquid strikes, because what happens? We're just trading against each other, gang. We're moving the bid on each other. I don't want to jump into illiquid strikes. And also think about getting out as well as getting in. You get into an illiquid strike and the spread is much wider. So there's a lot of logistics that are easier in a liquid strike. All right. So there you go. That's Peter. That's the way I would look at it. And that's specifically the way I would look at post earnings ATVI. I would look to the long side. Absolutely. But give it a day or so. Let the dust settle. I did an update on this on Friday or Tuesday. It's a little bit of a blur. And I talked about, I think it's called less. Actually, you know what? It's a really good update as far as what I'm looking for. And what was it called? Oh, it was, there you go, just a day ago, when the dust settles. So by the way, gang, if you head on over to the Simpler Trading YouTube channel, so just go to YouTube and then in the search, if you put in Simpler Trading, right, and you search it, you'll end up with our YouTube channel. Many of you are on that channel right now. And then I've always wanted to draw a mustache on myself like that, right? Can you graffiti your own? Yeah, there you go. I'm graffitiing my own face. So if we clearly punchy this morning, if we take a look at all the available videos, you'll see right there under videos, let the dust settle, check it out. You'll see that period of time that I think it makes sense to wait. And then, by the way, gang, we were talking about macro on the onset of this very show this morning. If you are curious, you want to learn more about, hey, Rog, yeah, that was pretty cool how you read the Federal Reserve stuff. Now I know where to look. How do we use that data? Today at 4 p.m. Eastern, so right after the bell, I'm going to hop right back on YouTube, and we're going to go through about a 30-minute discussion of how I set up my weekly trading plan. In other words, I don't know what's going to trigger Monday, Tuesday, Wednesday, Thursday, Friday. We can't figure that out on a Sunday, right? But it's important that we're looking in the right directions. It's important that we know where the opportunity is going to be. For example, a few weeks back, we've been talking about, as soon as we moved from Q1 to Q2, our adjustment was, hey, let's start looking at healthcare. Let's start looking at financials. There's a sector rotation. There'll be things like that I will show you how and what I'm doing to point myself in the right direction at the beginning of each and every week. All right. So again, today at 4 o'clock, right here at the YouTube channel. All right. Next up is Earl asks, to what extent do I consider option chain volume when selecting a strike price to trade? So Earl, volume is a different animal. When it comes to volume, remember, volume starts off at 0 at the beginning of each and every session. So it's cumulative, right? It's cumulative. If there's not open interest there, there's likely not going to be much volume there. So I really don't pay that much attention to the options volume. I'm much more interested in the open interest. Yes. So when we start off at 9:30, most of the strikes that we may be considering, even maybe taking profit on, my mastery folks, heads up, we've got our Visa position, which is looking possibly interesting this morning. We'll see what we've got going on there. But when we have illiquidity on the volume at 9:30, that's to be expected. We haven't had that, action starting off yet. So definitely open interest. All right, next up. Hey there, Andy. I can't day trade. I can't day trade because I have a margin account. Can I get around the 25K day trading rule with a cash account? Andy, great question. So how many of you out there are interested in day trading options? We do that every single morning in the Sector Secrets room. We'll be looking at SPY, QQQ, GLD, different stocks, ETFs, you name it. And we do that 5 days a week. So you might think, Rog, you have 25,000 plus in your account? Nope, you don't have to. Rog, how are we getting around that? Cash account. That's a funny little thing. It's an easy workaround. And because we're day trading, we're not talking about options expirations that are usually much more than a 0-dated option or the coming Friday. And I mentioned time because time is one of the pieces of why an option's more expensive. The more time, the more expense. The more volatility, the more expense. If you're deep in the money or at the money, it's more expensive as compared to out of the money, right? So those are the factors that work into what we pay for an option. Because day trading options are usually far less expensive options, I recommend, and I do myself, when I'm day trading options, I do so in a cash account. Absolutely. It's the easiest way that I've known. I've done it that way for decades. It's just easy. And I'll also say, I'm not one to say to a day trader who might be a new day trader or whatnot, any number of reasons where multi-leg strategies for day trading are not necessarily useful. They're usually done to do two things. They're usually done to make a trade more affordable, taking something that was rather expensive and making it more affordable. I'm not a big fan of that. We'll trade more expensive things as our account grows. That way it's a very natural progression of accepting risk, right? So I'm a big fan of a cash account. Absolutely. I'll even swing trade in a cash account. I think it's a very powerful thing to make sure we don't overdo it on the horsepower of leverage. Great question, Andy. I appreciate it. All right, next up. Let's see, Penelope, how are you? Good morning. When you have your at a glance sector charts pulled up, what time frame are they, daily or intraday? Okay, you're talking about the multi charts? Oh, yeah. This, Penelope, you can look. This is what's cool. If you want to look at a relative performance scan on any time frame, you could set this up for 5 minutes. You could set this up for 1 hour if you're using short-term swings. Usually even weekly, if you're doing the more portfolio stuff that we do in the Sector Secrets room on Tuesdays. But daily is what you're going to see on mine. Most of the time when you are looking at this multi that I'm sharing with you all, again, the absolute best way to see relative performance, gang. And the tools that are on here, whether you're in the Sector Secrets Mastery Room with me or in the Futures Room or in the Options Room, the key to this, gang, that makes this so simple are the trade flags. And I give those to you all gratis. They are free. There's a layout that I share with you all in the Options Room, in the Futures Room. My Sector Secrets folks, you get the juiced up layout of this, but everyone can grab the trade flags and put them on a flexi grid chart. And it's these trade flags that make the scanning and the relative outperformance. As long as we're looking at the high concentration weighted stocks in order, gang, that's it. Free, easy, it makes scanning very, very visual. And what you can see, green, yellow, red, there's a lot more accuracy, speed, and confidence that comes with, oh, it's green, I know what to do. Oh, it's yellow, I know what to do, right? Okay. I think, gang, is that 20 minutes already gone by? Holy cow. All right. So, gang, wow, I can't believe 20 minutes went by. Anyways, that's not it for for today, for this Thursday. I'll see you all at 4. Yes, right back here at the Simpler Trading YouTube channel. We're going to talk about how I set up myself for success every single week. All right, gang, have a good one. Be good to each other. I'll see you back at 4 p.m.